Welcome back, Hustle Family. Today's gonna be a great episode. We're going to talk about how to buy a house in 2023. We're gonna start from the start to the finish. We're gonna start from the start to the finish.
What the fuck was that?
Anyway, the first thing you need to do is for lenders. That is part of the process because they want to find the right person for them. Now, don't always ask them, hey, what's the best rate you could get me? Because they don't know the rate. You're not ready to buy yet. So you ask them the rate is irrelevant. They can tell you any numbers. And a lot of times I've seen it where they lie to you. They say, yeah, I get you the lowest rate. I'm going to get you this. And then by the time you're ready to close, oops, my bad, I can't get you that. So don't get your hopes up. Just find out what information they have. If they have any grant programs, what can they do? How many closings do they do? How often are they closing? How knowledgeable they are in the subject of mortgages. Are they still studying? You want someone who's actually closing because they're going to be the lifeline. They're still plugged into the market. You don't want someone who says, yeah, I close one deal a year, because they don't know what the heck they're doing. Mortgage rates, mortgage terms, the feds, they're always changing things like this. So you don't want that to happen. So now you watch this video, you spoke to a lender, you feel comfortable with the lender, then you're gonna let the lender pre-approve you. And that's when you're gonna have that file, send them all the documents. They're gonna work on their pre-approval. Yes, they are going to run your credit in a real pre-approval. We pre-approve you. So when I give you this letter, it's good enough that you can put an offer in a house. Sometimes I take it even further and I'll pre-underwrite you. I'll send it straight to the underwriting department and let them check it, run in DU or whatever software they need to, and then they'll say pre-underwritten. So that means that's a step above a pre-approval, right? Then you're gonna meet with a realtor. If you don't have one, I'll connect you with one. And like I tell all my clients, you're gonna interview the realtor also, just the same way you interview me, because I want you to have a good fit. I'm all about this energy and feeling who you're working with to make sure they're a good fit for you.
Mr. Marcelle, quick question. So what exactly would be the difference between getting a pre-approval and being pre-underwritten?
Okay, pre-underwritten. A pre-approval is when I run your numbers, I check it, everything looks good. Me or my team does that, right? When I underwrite you, I send it to the underwriting department of the bank to look at your file also. So I'm already sending it to a bank to have everything checked and have them recheck everything that we did. And it's a step above because now the only thing missing is gonna say a property address, TBD, to be determined.
Okay.
But everything else, you check, everything's already done.
All right, so let me summarize. So pretty much when you get pre-approved, this is just based off your documents and everything like that with your loan officer, right? When you get pre-underwritten, all those errors and issues that may pop up during the underwriting process and, cause an issue to the file, you know and you sort out in advance. So once you actually start the process or continue the process, it's 1, 2, 3, like all you have to do.
Yes, pretty much yes. The difference is what Giselle said. Pre-approvals with my team, I look at everything, I make sure we find all the hiccups, it's good to go. When I pre-underwrite you, I'm sending you to the underwriting department of the bank. So those are the people who actually write the loans. They're already looking at your documents. So they might find things that I miss. 99.9% of the time, I find everything. But there is that 0.1 chance that I miss something. So that's what we're going to another step. The reason why we do this is to show the seller, that whenever you put in an offer, that you're ready to go. Getting underwritten can take up to a week to 2 weeks. So you already did that. So now they're like, oh my God, he's already 2 weeks ahead. This loan can close in about 15 days, maybe 20 days max. So it shows that you're active, you're ready to go, and you're serious about your offer.
Okay.
So it puts you ahead of everyone else. So that's that. After that, obviously, you spoke with the realtor, you find a good fit. The realtor's gonna start showing you properties. After the realtor shows you properties, you fall in love with one, you send the numbers to me, or the realtor sends the numbers to me. I run it again to make sure it fits your pre-approval, everything looks good. And then I say, okay, you're good to put in an offer. Then the realtor is gonna speak with you, you guys are gonna communicate an offer, the realtor is gonna do what they do, type up an offer, submit the offer. Once you get the offer accepted, that's when you're going to say, yay, Malcolm, they accepted my offer, woo, woo, woo. You're gonna come back to me and I'm gonna be like, okay, that's great, everything sounds phenomenal, but guess what? You're gonna be like, what? we're not finished yet. I'm going to then connect you with an inspector. An inspector is going to make sure they find everything that's wrong with the house, like anything that could possibly be wrong. So, quick story: we actually had a client who decided to skip this. I said, hey, this is an important step, but at the time, she really wanted to save money and
she wanted to
close quicker. So she was like, she decided to skip this step because it was gonna take 3 to 4 days or whatever, and one of the worst things she could do. Now, if you do work with my inspectors, I usually speak with them and they try to give you what's considered like our savings account. Like I created like my own unofficial grant where they take off money off of their normal prices to help you. So even with that, it was still a little too costly for her. She was like, hey, I can save that money, use it towards closing costs or to buy down points. So she didn't want to do it. Long story short, she calls us after we close. We end up closing the loan. She calls us, I think, 3 months after, and says, "Oh my God, this is wrong. The roof is wrong. We found black mold in the garage. All these issues came up, and the reason being is because we skipped crucial steps." So what I always tell my clients is, if we're telling you to do something, we're telling you to do it for a reason. So don't skip certain steps. If it's something that I feel like you don't need to do, I'll be like, hey, you know what, that's not really important, but certain things is very important.
If you're being advised by the professional to get something done, it's probably
in your best interest to get it done. So get inspected, the inspector's gonna send you a whole report. Sometimes you might see issues in it and be like, hey, let's go back to the drawing board. Let me see if they'll give me lender's credit. Let me see if they'll give me some credit for this, or if they're gonna fix this, that. After you guys submit everything, it's time to get the attorneys. I will either advise you to use, not advise you, I would recommend you to use. I have about 3 to 4 I use. Like, hey, here's a list of people. You interview them, you pick them, or if you have your own, use your own. Once again, if they know they're coming from me, you're gonna get another discount because everyone on my team, our job is to make sure you have a simple, easy, and fun closing. And we also try to discount our services because at the end of the day, you're buying a house. You're buying something that is probably going to be one of the biggest purchases of your life. And on top of that, you're buying something to create generational wealth. So we're not here to suck all your money dry so after closing, you don't have money for furniture or to paint or to fix it up. So when we can discount our services, we do. And that's what we do. We try to help you. We're a family, we're a team. Anywho, so after you do all that stuff, they're going to sign the contract now. You sign it and then the buyer signs. You sign as the buyer first and then the seller signs after. You put your down payment, then it comes back to me and I start working on the file. This is when I'm calling you, annoying you, asking you for documents that you sent 100 times, but it's not my fault because the bank is going to actually the underwriting department asks for a lot of the same docs.
And there is to keep in mind when you're doing a mortgage and it's taking, a month or a month to 2 months to close, they always want the most recent. So
of everything.
If you're getting paid bi-weekly or weekly, that means bi-weekly or weekly you have to send your updated pay stubs. Monthly you have to send your updated bank statements. It's just something to keep in mind.
Yes. And I swear, when we're closing files somehow, emails get lost sometimes. I think like there's an email monster that just eats people's emails. Because you're like, I sent it to you, and I'm like, I don't see it in the email. And you forward me like, oh, you did send it, but I don't know what happened. The email monster just ate it. So please be wary. It's not our fault. And you gotta understand, we're doing all this for you, but we could be working with 10 other clients at the same time. But you don't notice it because we give you so much attention. You're like, hey, I'm the only client you're dealing with. How can you not see all this?
We make time for your client.
Yes, we'll make time for you, but our emails is flooded with other people trying to get pre-approved. We have other issues. The bank asking us questions. You sending us attorney, realtors. Like we're dealing with everyone in part of this closing. So we do get overwhelmed. And that's why it's good to have a good process as a loan officer. But you're not gonna notice it as a client because our job is to hold back the floodgates and all this people asking you questions, and we try to be the ones only asking questions. You only deal with one person, and normally either the realtor, which most times probably won't bother you, they'll bother the loan officer, and your attorney might ask you a few questions, but even they usually ask the loan officer most of the questions. So we're holding back a million people asking you questions.
Holding back the floodgate.
Holding you back, oh no, leave her. She's stressing with enough stuff. So bear with us when it seems like we're asking you the same questions because it is a lot. And okay, so while this is happening, our processor might reach out to you. My processors tend not to reach out to the client, they reach out to me, and then I will reach out to you if needed. Sometimes I already have the answers. And then we order, that means we're speeding through. So we're speeding through, you send me docs, I'm sending back underwriting, dealing with that. Then we go to when it's time to order the appraisal. You pay for that. That is not technically a part of your closing costs. It is, but it isn't. Meaning that at the end of this entire process, you have a closing cost. The appraisal is something you pay before because we have to pay a third party to do another appraisal on the property. So appraisal, think of it like this. You have this nice shiny car. The seller's saying it's worth $35,000. The bank is like, I'm going to give you 97% of it. You're only putting 3% of it of your own money. So the bank is going to want to make sure that car is worth $30,000, whatever the seller is saying it. So they hire a third-party person, someone not connected with the bank at all. I don't even know them because the bank doesn't want me to have that connection with them, because then I can try to bribe them to make sure that that car comes back at the price. The bank wants to make sure that this is a safe investment for you and for them because they're putting up the bulk of the money. So the appraiser comes and checks it, says, okay, you know what? This car is actually worth $25,000. Now what happens? It's not worth what the seller's saying. It's not worth what we thought it would be worth. That seller either has to lower the price or contract is voided. Or you can put down more money. That is 100% true, but like in that situation, something that I wouldn't recommend to my clients because the bank is saying it's not that worth that much. Why would you take on the extra risk of putting down more money?
Because if you had to sell it, you wouldn't be able to really sell it, or you would have to work harder to sell it for the price that you purchased it for.
100%.
You're not buying the property with equity.
Now, I'm going to do another video and talk about this because this can go in a lengthy conversation, but we're focusing on the steps. So the appraisal comes back in. Let's say it comes back in at the number that we needed it to. We go in, boom, 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 a couple more days or weeks, and then ready for closing. Everyone's happy. Title comes back clear. Title gets ordered by your attorney. If you're the buyer's attorney orders the title, and title's gonna make sure that the person who is supposed to be selling this house actually owns this house. They're gonna give you what's called title insurance to make sure that after you close, if anyone says, no, wait, that's my house, and the title insurance is like, nope, we're covering this person because we already checked all the deeds and all the tax documents and all this stuff. That person owns the house. So you can't say anything. If you do, you try to sue, take the house, we're gonna protect them because that's what title insurance does. Does that make sense? Then after that, the two attorneys are gonna meet with the realtor and you guys, the seller and buyer, and see what date works for everyone. And then we finally have closing. Mr. Step, before we get there, I have to give you the CD. The CD is called the closing disclosure. This is the final document where it actually shows you the rate, how much everything's gonna be. Up until this point, everything's an estimate. All the other documents I give you is called a loan estimate. So I'm estimating the numbers because I don't have everything yet. The title hasn't come back. Your attorney fees, I don't know everything yet. So they're all estimates. The interest rate on that document is a loan estimate. Everything, the only document that really matters is when you see the CD, closing disclosures, because this is the finalized. This is what the bank is saying. This is what everything's gonna be. Now, granted, the closing disclosure can change a little bit, but most times out of 9, that is the final numbers that you're gonna see, okay? So before that, it's all estimates. Now, you get the CD. Once you sign the CD, I think it was TRID, right? That says you have to wait at least 3 days. I think so. I can't remember what bank policy or thing says it. But after you sign the CD, we have to wait 3 business days before we are legally allowed to close. All right? After those 3 days, that's when they schedule the closing, blah, blah, blah. All parties agree. And then you do what's called a final walkthrough. You can either do it the day before or the day of. The reason you do this is because what if after you saw the house that was like a month or 5 months ago, depending on how long it takes to close, what if the seller just went in there and started banging up walls, taking things down? You don't know. You go to this house and like, this wasn't the house I bought. So this is your chance to be like, oh, no, I'm not signing those documents. This isn't the same house that I bought. If it is the same house, everything looks good, you sign, you do it, and closing, you're just gonna be like this. 9 times out of 10, the seller doesn't really have much doc. It's usually the buyer. You're just like signing so many documents, writing checks, doing this. After that, they give you the keys and you're like, celebration. And then, you know, if you're my client, you know how I do after closing. So my past clients know how we do after closing. That's a surprise. And that's pretty much it. Long, yes, I know. But I try to make it simple, easy, and fun. And especially if you work with me, you know, I have an app now. We have like a mobile train stop that shows you where we're going in the closing process, so you're aware of what's coming next. And I try to make it as simple, easy, as fun as I can. Hopefully that was a good explanation. I might have missed 1 or 2 things. Put it in the comment section if you think I missed something. And hopefully this helps someone. This is your favorite loan officer, over and out.